Hello, traders. It is Thursday, the 1st of August. Happy first day of August 2019. It's 8:01 a.m. Chicago time, 9:01 Eastern on another Trader Bite episode number 1568. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance is really mixed. We see a drop in crude falling about $1 to 57.60, down 1.67%. Gold is off, trading at 14.17 and 40 cents, down $20 or 1.5%. The cable's off, the euro's off. The S&P is right at settlement and above the prior close. Um, the S&P settled much higher than it closed. Just as a point of fact, the close in the S&P was 2978.75. Settlement is 2982, 82.25, something like that. Um, the leader today is the U.S. dollar. Go figure. Interest rates get cut by 25 basis points and a dollar stronger. Okay. 13 ticks up in the bonds, and the 10-year is up 4 ticks, 4 big ticks in the futures. So really a mixed bag overall. We have not really recovered to the prices or to what we consider to be balanced much higher in the indices. The market came off yesterday with some exceptional force and range. The S&P dropped from the SOC, the scene of the crime, on the Fed release at 2 p.m. Eastern U.S. time, which was at 3,013 and a half. 3,013 and a half represents the scene of the crime or the SOC of the Fed cut. And we went down as far as 29.58. We haven't seen that kind of range for some time. So there are a couple things that I want to make sure I point out. I'm going to try to not keep this going long, but overall the market sentiment is mixed this morning. Yesterday is considered an impulsive day down. Okay. In terms of what's ahead of us on the calendar, we got several releases this morning, but really interesting. This calendar's not right, I don't think. It's not showing. Okay, and we're looking at ISM manufacturing at 10 Eastern, expecting 52. Construction spending expecting 0.5. And that'll be pretty much it. The Bank of Japan monetary policy meeting minutes come out at 7:50 this evening. Not much in terms of what is scheduled. Expecting a Fed parade at some point. And tomorrow, I want to remind you, is non-farm payrolls and unemployment in the United States at 8:30 Eastern. That's going to be a big piece for tomorrow. So tomorrow, the big release is the non-farm payrolls. We do get Michigan sentiment, but it's a final. But once that number's done, we're pretty much done in terms of pre-scheduled stuff. What did we expect yesterday in the review segment? Yesterday, the primary scenario is that we are likely to dip down from where we were to the point of control or thereabouts, come up, take out the high, and go sideways into the FOMC. And I didn't draw the arrow down, I meant to. It could either go up or down from the FOMC and all that. So that's the primary scenario. The secondary is we push up, impulse down, start to drift down, and then the FOMC comes out. The market actually played out scenario one, except that it dipped a lot deeper, right? So scenario one, as you recall, that I just covered, is an open that drops down into the point of control, which was up here. It actually dipped a lot farther down into 3009. And then it took out the high, the prior day's high, went sideways. There it is. And then FOMC right here, and and then the conference started right here, and the conference really was where the dumping started. So overall, we did get scenario one. It pushed deeper down than expected, but that's how we're set up currently. Okay, we did have a very clear spike. I'm going to go through a few things here that I think traders should know. The low, the low here is actually an MC point of control. Let me pull that up. The low is exactly the MC point of control for June. Okay, for the month of June. At exactly 26.58. I had the stock zone there yesterday, hit it right on the nose and bounced. Not that that makes me some super trader or whatever. It's just luck, really. It's pure luck. But it dropped to 29.58, right on top of the MC point of control for June to test that. Also, we have the all-time high of 2018 at 2960. This area has a bit of confluence in it, and it provided support. Now, on the bounce, we had a pretty strong spike up before we came and retested. And so what we end up with is a kind of a flagpole here in excess from 29.76 and a quarter. So 29.76 and a quarter, and you'll see it better here. This is where market profile is a little bit clearer. Actually, let me enlarge this. This market profile right here, what you see right here is a composite of everything from July 1st, just for me to see where we are. But you can see from this point down right here, L period down, that there was an excess spike here. This is an excess low down into 29.58. And it starts at 29.76 and a quarter. So 29.76 and a quarter is a line in the sand early today. We would not want to see the market, if you're long, you would not want to see the market below 29.76 and a quarter, as it's likely to slip a fair way down. We're getting into the spike down. We also have a set of singles, also an L period. Notice this L period was an incredibly wide range. We have a set of singles from 3004 to 29.99. So as the market pushes up above 29.99, it's got 3,000 to deal with, but in general, we expect it to work itself up into this 3004 before it gets into any structural resistance. Okay, those are three key things to kind of pay attention to. The market's currently trading at 29.80 and a quarter, has pushed up to 29.90. The range overnight has been pretty good. A lot of structure to deal with from yesterday, which is nice. We are expecting to get continued volatility. The market's not moving away currently from the from yesterday's close. It's still trading in the range that was established right after the press conference, and it's holding on to this area between 29.99 and 29.76. So that's where we are. Looking at the overnight session, here's the overnight session. Remember, we did have a spike down. We did have an impulse down. Generally, yesterday didn't quite close as weak as we would expect in order to see a continuation lower overnight. It actually recovered more than the midpoint. The midpoint's right here for the session, and the S&P pushed higher and closed below. It did close quite weak by historical standards, but please don't get suckered into thinking that somehow this massive rally up is all of a sudden, taken back by, a 50-point drop or 60-point drop from the all-time high. That's not how the markets work. In general, the tops do take some fighting, do take some forming. before we see that. The thing to look for here is on a bigger time frame, step out into the daily and weekly, the bigger time frame. The market will likely make an attempt higher that fails, and then we get another large volume and range day down before we start to understand that the bears are stepping in, the sellers are stepping in, and it's seeking prices lower to find buyers. Until then, um, no offense to anybody in particular, but until then, all of the bears with their tiki torches are going to come out and tweet and tell us how the market is crapping out, how it's, they cut interest rates, yet the market's responding poorly, and so on. And the market's responding poorly, in my opinion, and I'll leave this to the macro gurus, but is responding poorly because there are underlying monetary currents and just a global slowdown that's been going on for actually a year and a half, 2 years, that the Fed is trying to get ahead of. And it's witnessed by how excess reserves and things like that are being interest on excess reserves versus the Fed funds rate and all that stuff. So listen to macro voices to learn about that. But what we have is a market that has already priced in the cut. It got the cut, and the conference just made it seem like the Fed is not going to be all that aggressive. They're being accommodative here by cutting, but they're not going to be all that aggressive with cutting and with what they do. So the market's repricing that. But overall, this is really just a spike down. We've seen days where it just drops quite a bit and then it just walks itself right back. Remember, the SOC for the Fed, the price that brings us back to the auction before the Fed announcements, 30.13 and a half. And that's not that far away. That's 20 some odd points, 20, what is it, 30 points away from where we are. That's about a day and a half's range. So let's not get carried away. Let's not fall for the idea that, hey, I should sell every push up at this point because the market's just crapping out. That's not really the case. I'm trying to help you. So that's where we are. Looking at the heat map and the order flow on ctbookmap.pro, really the overnight session has had this standing offer right up here at 29.90, which we came up to. The overnight high was 29.89.50. It's been sitting here all evening, and there's some stacking ahead of it that's taking place that's likely to shift up. And then there's this bid that's been sitting down below for quite some time as well in the 29.61.62 area. It doesn't coincide with anything I've got in my notes or areas that I'm interested in, but it'll be interesting to watch to see which way the market, what size magnetizes the market to it. And then if I see that there's liquidity aligning with my areas to do business or stock zones, it's a registered trademark. If I see them align, then I'm likely to participate in those areas. That's basically how I'm approaching execution. But overall, not seeing anything exceptional in the overnight session, but we do have, again, this offer 29.90 and this bid at 29.62 that have been standing. And then there's stuff that's been shifting around here and there, as it always does. But there's not much more I can pull out of this. In terms of what we're expecting for today, let's take a look here. A lot of stuff on my screen, and I need to clean that up. Here we go. What are we expecting for today? For this morning, I'm looking for, it's clearly going to be an auction in range. The expectation this morning actually is not an open auction. I'm expecting someone to step in that first hour and get things squared up. The longer time frame, often the algos, the systems, whatever they are or the approach is looked at on a close to close, daily close to close basis. And yesterday was, as I said, an exceptional day. I'm looking for an attempt lower this morning that gets bought up. I'm looking for a slide down, and I'm looking for an impulse up, and I'm looking for it to start working itself back up towards the overnight high and towards this 29.99 to 3,000 area as the primary idea for the day. So it might do so from the open and run to 29.99, 3,150, that area, or it might pull back, which would be really, really generous and nice of the market to do. Give us a pullback where we can see how the bidders are behaving and the buy aggressors are behaving, so we can join them and then see the turn come true. The other is a push higher that then falters and then has an impulse down, consolidates for a while in the middle before it starts drifting down. Anything below that 76 and a quarter, I'm not going to be looking to buy, so I'm not going to be buying these stock zones down here if we push down. I'll watch for a reaction there. I might scale out ahead of those areas, but I'm not looking to initiate because this V bottom here that we put in yesterday had a ton of volume in it, that occurred very quickly, that just stepped in very quickly and um, lifted and left us with this very, very thin area. And I expect that if we start to push through this, it's likely to trickle down all the way through. So if it does get below that 76 and a quarter, I expect it to test the overnight low and push through potentially to the low from yesterday. Most likely today is an inside day, and that includes scenario one. Most likely the market will rest ahead of the non-farm payrolls tomorrow. That's the most likely outcome for this morning. Okay, so I'll leave you with that. For Convergent Trading members, tonight we have our group mentoring session at 3:30 Central, 4:30 Eastern. Make sure you submit your form to participate. We'll spend an hour just looking at what each individual is doing and offer the best advice we can to see improvement. Good luck today, and I'll catch you tomorrow. Take care.